Jeff Killian for the InsideTechnician.com. Real-time trade taken just shortly ago. Right here, current mark to the market price is 1454.25 was to fill, looking for the second leg down on a trade already in play, entered up here at this level on the initial sell-off that came with the volume behind it right here in the 2:01 p.m. Eastern Standard Time bar. The level for that price was 1458.75, filled at 1458.50. On the secondary move for the leg down, after the level has been established here by this bar at the 2:12 p.m. 1-minute bar, looking for the secondary move to the downside. The break was below that level. We have a short-term retracement to the upside. The overall momentum is still to the downside. Let's take a look at some of the 15-minute indicators. At this point back here, after the peak was created after a long-term negative divergence, analyzing the difference between the slope of the line from this point here to a higher area as compared to a lower high on the indicator here as compared to the past, the divergence was clear. On a 15-minute chart, the levels to the downside still exist here at the two bars that were laid out at this approximate area on the 9:45 a.m. bar. And again, at the 10 a.m. bar, the next level to the downside for a projected profit will be right here as outlined by these two bars, just short of the open of the 4 p.m. bar on 1/2/2013. Again, laid out by these two bars right here, the level specifically as laid out by the open of 1/3/2013 at the 1:15 a.m. bar. Trendline break on money flow to the downside after the negative divergence. Taking a look at some of the other indicators, the EMAs crossed right at the entry point here, signaling a go situation. Here, if we take a look at the MACD, had to cross as well right here at 2:15 bar. And again, here we are. The Stochastics Momentum Index here crossed just before the trade was taken. Let's take a look at a little something different here on the Chaikin money flow. If we make the relative comparison of the most recent price action to the indicator levels, let's go ahead and fly this in and rearrange this. And you'll be able to see the strength of the negative divergence as compared to the prices. Here we are. Clear entry point laid out right here. Just a quarter of a point down. Again, filled 1458.50. We are now looking for the secondary move to the downside. The overall 15-minute chart momentum is to the downside. All quiet environment. A lot of traders are in right here on a secondary move. Us as well. Here we are, gap down, indicating some weakness on the current 1-minute bar, marked to the market, 2:32 p.m. Eastern Standard Time, opened at 1454.50. Here we are. This is what we're looking for. The additional downside move. The interesting part about this trade, if we look back here, is that at this point right here, at this price point, 1453.75, so on and so forth, if we take a look back, we must reference the next, on the 1 minute chart, price profit target point that can be achieved. We're looking at this level right here at 1455.24. Okay, when we're trading down, okay, your next level would then be considered to be here, where the price is nearly stuck for a short time. Here, where prices are now, here. And then the ultimate price profit target would be more to this area. We'll eliminate the two, the open and the close, where I initiated the trend line from in the most recent data on the 1 minute chart, connected to here, broadcasted out for the exact entry. Looking to get to this area right here, being 1453.25. We're just about there. Price is still heading down. Mark to the market, trading at 1454 flat, 2:34 p.m. Eastern Standard Time on a secondary move. What's important to remember is that the 15-minute charts will dominate the 1 minute charts. There may be some degree of volatility that's evident on the 1 minute chart that will not be evident on the 15-minute chart. And although the 1 minute charts are actually pushing the 15-minute charts, in fact, the 15-minute charts are the charts on an intraday basis that will dominate the overall intraday movements. Some of those movements will turn into high probability trades and some will not. This was a high probability trade. 20 contracts are traded at the moment. Looking for the second leg of the move right now. The reason for remaining in the trade is simple. The run-up on the event-driven news. We would always want to look for the retracement to the downside to give back some of those gains, again, on a lot of manipulation, political manipulation. We never had the type of volume behind the daily sessions, namely the last 3 sessions on the Dow, nor the S&P equities, that would sustain the type of upward movement, leading to the conclusion that the upward movement is based on internal weakness, and therefore one would look for the short move to come in and take the trade to the downside. Looking at the price profit target number 3 at 1453.25 to the downside on a secondary move. A lot of traders came in right here on the secondary area. Here we have it. Move continues to the downside, continues to the downside. Let's see how prices react at 1453.25 on a 1-minute chart. Backing it up, the next level would be here. Let's broadcast that out into the future. A trade taken previously before equities opened. And we'll just extend that out into the right, to the future. And now we'll see how we're doing. We may be exiting this trade momentarily. Lock in the profit. Let's look for a trend line break to the upside. In the case that that does happen, it should happen right here. Break to the upside. Right here would be the area connected from this data point to this here. $20 contracts traded. First to be in right here, just below, a quarter of a point below this area right here. Trend line break. The level established. Here we are. 1458.50. There we are. Another break. Let's see how this bar closes. The overall momentum on the 15-minute charts is still to the downside. Let's go see what they have to say. More downward momentum on the 15-minute, 14 period money flow. Here we are. EMA is still in excellent position. MACD still in excellent position. Stochastic still with some room to go, possibly to here, leading the prices to the way down. Negative divergence is clear on shaken money flow, still to the downside. The momentum is still with us. Substantial support level established at 1453.25, acting as a price profit target. Trend line has not been violated on a 1-minute chart. Clear sell here on a 2:37 p.m. bar for 6,693 contracts. We are looking for the close below 1453.25. What may turn out to be one more level to the downside as established by previous prices. Back here again by the open of 8:15 a.m. on 1/3, today's trading. The open price was 1452.50. Okay, trend line violation. Just about ready to get out of this trade. Just about ready. No new volume has come in, indicating an additional sell-off. Looking at the stochastics, one would tend to stay in the trade where there is so much momentum available to the downside. Here we are, marked to the market at 1454.25. Confirm 1454.25. Volume 2,126 contracts. Just about out of the trade. Trendline violation would be a key. There we are. We are out of the trade. Now out of the trade, filled at 1454.75, confirmed at 1454.75. $14.54.75. Again, on the out, the current 1-minute bar right here at 2:43 p.m. Eastern Standard. $20 contracts traded. The afternoon session. $14.58.50 on the in. $14.54.75 confirmed on the out. Yes. Okay, all confirmed. Then 1458.50 here. Real-time demonstration. The mini trade taken by myself, Jeff Killian, Chief Market Strategist, the inside technician. A lot of traders came in for the second leg. Here, looking to get down to another price profit target, obvious by the volume here. Continued sell-off here for the second leg. The price profit target was reached to the downside, PPT3 at 1453.25. Prices traded back up. And there we have the out. Again, 1454.75 at 2:43 p.m. for a gain of 3.75. Confirmed, minus the spread. Net gain in the trade of 3.25 points. Confirmed. Yes, confirmed. A net gain on a trade of 162.50 US times 20 contracts traded. Net gain on a trade of 3,250. Confirm 162.50 at 20 lots. Final confirmation, $3,250 made on the trade. Before the trade turned back around, had a chance to trade up as it is right now in real time, locking in a profit. Always looking to get out at the price profit targets is the essence of high probability trading. We do not want to give any money back, traders and investors. Let's have these price profit targets laid out well in advance to get out on the rally point. We want to get out at the rally point, lock in the profit, which is exactly what happened. These prices may trade down again. What's important is to follow the system, follow the methodology. On this end, following the smart money trading methodology allows us to trade only the true high probability trades. This is Jeff Killian for the Inside Technician. One more real-time trade demonstration. We'll cover this tonight on the Nightly Market Intelligence Report. All subscribers will be given a walkthrough of this trade, including one more demonstration of the 15-minute real-time charts and why everything was done exactly the way it is. We'll see you tonight on the next Nightly Market Intelligence Report.